Up next, we have one of the most unique companies with one of the largest moats in the game. This is AG Barr, and they, whilst sounding like some sort of legal company, own Irn Bru, the Scottish soft drink, fizzy drink that everyone in Scotland loves, and I'm sure it's completely biased in that one. I see Irn Bru all the time, and I do enjoy a good old Irn Bru. Very fond of the diet one and the normal one. I like both. So, for everyone from Scotland, this will be a particularly fun video as we look through AG Barr. They are an extremely healthy company and, like Games Workshop, are debt-free, which is actually a really rare thing to find these days. So, let's have a quick glance of them here. Their ticker symbol is BAG, BAG. Pretty easy to remember. They have had their ups and downs. They're only down 1% over the last 12 months. Currently trading at £5.44 per share with a market cap of a respectable 603 million. They are, with their subsidiaries, manufacture, distribute and sell soft drinks. Now, not just Irn Bru, they own several other brands as well, which we'll be looking at. As well as they trade 40% below their fair value. We'll look at that too. Earnings at a growth of nearly 10% per year. Unstable dividend track record again due to, you guessed it, the pandemic. Down over here, 6 out of 6 in financial health. Where else do you see things like that? Games Workshop springs to mind. Valuation, they're actually a 4 out of 6 and a 4 out of 6 in dividend. Plus, not the worst when it comes to future growth. Now, their past performance is down at 1.6 or 1 out of 6. So, let's have a look. Flawless balance sheet, good value, and pays a dividend. Now, let's get to know AG Barr. Irn Bru, again, the most popular drink in Scotland, and there's a meme going around that it's the only place in the world where there's a drink less popular than the Coca-Cola equivalent. Now, obviously, that doesn't make a total amount of sense, because A, Scotland's not an independent country. Sorry to let you know on that one. And secondly, North Korea and a few other countries aren't exactly the biggest fans of Coca-Cola at times, so it's still pretty cool. Now, they do have a new drink brand called Rubicon here, both in soft drinks and in energy drinks. No, they did not sponsor this video. That is simply out of the wee bit too big for me at the moment. But Boost energy drinks they own, so I'm sure plenty of you are fond and know of Boost. It's a very popular drink over here in Northern Ireland. I have never tried these, the bar cream soda and bubblegum and all. I've never actually seen them over here. The Australian icon Bundaberg, don't know about that. They have DMB, Irn Bru, of course, extra and sugar-free. They've loads of mixers, and several other brands. Again, when you get down here, they've Simply Fruity. Yes, it looks an awful lot like Fruit Chip, because I think that's what they were going for. Rubicon and Rubicon Raw, so an energy drink and a non-sort of sparkly drink. And the Teaser as well. I've never tried that. An iconic British drink. Over here in Northern Ireland. Never seen it before. But it's pretty cool to see. So yes, they are a pretty interesting drink. Interesting company. When we go over to their Wikipedia page, some of you, if you're watching this in chronological order, will know that we talked about AG Barr previously when we were talking about Britvic. Back in 2017, they were actually going to merge with the company. Oh no, it was back in 2012, and the merger was then abandoned in 2013, which would have created one of the largest soft drinks companies in Europe. Britvic, of course, holding the likes of Pepsi in the UK market, Tango and Robinsons. So let's talk about AG Barr specifically. So a Scottish soft drink and energy manufacturer, widely known for, of course, Irn Bru. They're in the 250, and they were founded in 1875 by Robert Barr in Falkirk. When does Irn Bru come on the scene? In 1899, they launched Irn Bru, eventually launching it properly in 1901. There you go. They listed in 1965. They acquired the Tizzer brand in 1972. Then on in 2002, Roger White joined as managing director. Being the first chief executive outside the Barr family. So obviously must have been primarily family owned. It might still be. We'll see who owns the bulk of it later on. I feel I'm going to see like BlackRock Vanguard, but that is something that we come to expect. Oh, they acquired Boost Drinks for 20 million in December 2022. That's a recent development. Didn't know that. And then they acquired the Rio Tropical Drinks. Ah, nice. Wonder when does Rubicon come on the scene? Oh, in 2008. Oh, that's when they launched. Wow, so Rubicon's been around quite a while. I just only noticed it recently. So that's pretty cool. They had a legal dispute with Coca-Cola back in 1961 as well. Because Cola Barr and a few other ones, and they argued that containing Cola Barr was mistaken for Coca-Cola. Wow. Brilliant. Okay, so now that we've seen all that, we can jump back into Simply Wall Street. Links for all these websites in the description below, of course, and we'll have a look into them. In terms of competitors, Fevertree, Britvic, Coca-Cola, HBC and Nichols is actually thrown in. Not too sure who they are. I must look into it. You always find new companies, like to know all of the FTSE 250, heck, to know all the FTSE 100 is difficult enough because some of them are in industries you would never look at or think of. But of course, do as much extended research as you possibly can when it comes to anything like investing. And never trust advice that you see on the internet. Do your own research. In the last 5 years, they reached a peak of £9.75 back in 2019. Of course, they plummeted in COVID down to nearly £4. That wasn't their lowest point, however. That happened in September of 2020, down to £3.73. Again, a fair bargain, but a third of the price from their max. If I actually extrapolate it out more, we can see back in 2012, they were about £3.55 when the mergers were in talks. And obviously it was a bit of a dip there. But that was some rise they had to £9.75 before they crumbled there. That is something, again, to factor in. Recently, CEO, Chief Executive Officer changes, and they provided full earnings back in January there. Okay. In terms of news, nothing super positive, nothing super negative, which, to be honest, is a nice thing to see. There was also a dividend increase back in October, so we'll see how that's looking at the moment. In terms of volatility, as I mentioned in Britvic, they're not really in the most volatile industry by any means, so a 2.8% weekly movement. Again, nothing massive, so for safer portfolios, and again, the moat of brands such as Irn Bru, that is probably a big selling point for the likes of this stock. It has 1,000 employees, and current CEO is Roger White. Okay, so earnings, 34 million, not bad. Revenue, 370 million. P/E ratio of 17.7. Again, neck and neck with Britvic and Coca-Cola HBC, so it seems pretty normal for this industry. Down, we can find earnings and revenue. A bit of breakdown, cost of revenue. We'll have a really nice chart for that later on. Gross margin, 37%. Net profit margin, 9%. Debt to equity ratio, 0%. They're debt free and they have a lot of cash on hand. So again, a lot of people see that as pretty good for a growing dividend yield into the future, of which it is 2.4%, so much lower than the average saving rate as to other competitors like Britvic, which is closer to 3.5. But we'll see from the growth rate, that's not the entire story. Now, when it comes to payout ratio, it's a modest 43%. Now, when it comes to valuation, it scores 4 out of 6. And again, use this with a pinch of salt. We've got the share price versus fair value. Fair value is £9.19. Did they ever reach that? Yes, they reached £9.75 back in 2019. Now, of course, you have to factor in lots of other things like inflation and that. But again, this is simply a cash flow model, discounted cash flow model. So it's good that it's 40% undervalued. If you're holding this stock, that's some good news for you, I suppose. If you're, a fan of this particular model. On down, we can see the P/E ratio, and if we go on down again, we can see Britvic and Coca-Cola. As I said, neck and neck, and Fevertree is just way out ahead there. A bit crazy in that one. Okay, in terms of P/E to industry, again, they are just slightly below the industry average of 18.4. Let's go to future growth now at about 10%. Well, rounding up to 10%. They are projected to Recover well since COVID and grow quite a bit into the future. In terms of free cash flow, again, 25 million, not bad at all, and it's also estimated to grow in the future. And then they are outpacing industry, but not the market, in earnings growth, and well outpacing both the industry and market in annual revenue growth. Good things to see. All right, down to past performance, we can see that, things weren't fantastic, but again, factoring in the pandemic might, explain a few things. When it comes to the revenue and expenses breakdown, however, we can see cost of sales, 232 million, and then general admin, sales and marketing, again, it's a soft drinks company, things that you're expected to see, I would imagine, and then if we roll it back, we can actually see the changes over the years. Really cool feature that Trading212 has added. There's also a discounted link for it if you want to check out Trading212 or Trading212. Simply Wall Street is the platform we're using at the moment. So there's a wee discount code in the description and pinned comment. All right, so let's go to the balance health sheet. 6 out of 6. I love seeing healthy companies. It's one of my favourite aspects of my own portfolio. Games Workshop being probably one of the trailblazers for that. Again, debt is not a bad thing. When you see the red mist of debt, it's not a cripplingly bad thing. It's only when things get out of control is debt a horrible thing. They have much more short-term assets than short-term liabilities, and the same goes for their long-term, which is quite substantial. You can see that their equity has grown year on year. They completely wiped out their debt, and now they are holding cash of roughly 47 million at the moment, which again is pretty awesome. They don't have any debt, so interest payments and operating cash flow does not matter when you're comparing all these metrics. Now, let's see other healthy companies. We don't want to see that. We want to see their dividend, 2.4% yield. Average payout of 43%, and we can see it was a continuous growing one up until the pandemic, of course, where it was growing year on year. Stopped in 2021, restarted in 2022, and, it seems to be that it is on, it's forecasted to be on the recovery. Be interesting to see if their final payment over in May of this year will reach a level previously seen back in the likes of 2019. If so, then the forecast could be correct, and this company could be in for a really nice recovery and even growth into the future. In terms of their yield, it is close to the bottom 25% of the market. It's below industry average, but its forecast is meant to grow up to 3.7% in 3 years. So again, something to factor in. Cash payout and earnings payout, modest 43 and 57%. Now, if we go on down, their CEO gets a compensation of 1.8 million. Not bad, he's been in for 20 years. So in terms of experience, he certainly has that. He owns 0.3%. I do want to see how much the family own overall. I'm assuming they do have a fair part to play. Do any of the top executives? No one in the leadership team owns a substantial amount at all. Now, this is the exciting part. Some people were buying shares here and there. Someone bought 10,000 recently there. And ownership breakdown. Wow. Didn't see that one coming. Institutions, 66%. Individuals, 15%. So obviously that is going to be, unsurprisingly, the family. In this case, William Barr. He owns 15%, which means he has 17 million shares valued at 92 million at the moment. No change or increases. Linsell Train Limited, Rathbones, there's BlackRock, there's Vanguard, of course, popping their heads in to these holdings. And I don't think there's anyone else of note. AGR, that must be an employee share scheme. It is indeed. And private companies and general public are in the modest 2%. So yeah, he still retains a fair bit, William Barr. Not bad. Let's see here. They are currently employing 1,000 employees, and they're based in Lanarkshire in Cumbernauld. I probably butchered every word of that, but I tried. Anyways, so that is AG Barr pretty much covered for the day. Okay, what is coming up next? That is a really good question. I think I'll be doing redoing Rio Tinto up next, and we'll see where we go from there. Thank you all for watching. See you all in the next dividend video.